very good morning and welcome to Michael Joseph Center. Welcome to Safaricom for the announcements of the financial results for the year ending March 2015.
Good morning, ladies and gentlemen. The year has seen some strong growth, and the highlights that we have spent, continued to increase our spending on improving the network. We've increased spending by 21% on CapEx last year to 34 billion shillings. We've seen our total revenues grow by 13% to 163.4 billion shillings. Service revenues, which is largely everything except handset sales, grew by 13% to 156.2 billion shillings. And our non-voice revenue grew by 27% to 68.8 billion shillings. That now means that non-voice revenue is accounting for 42% of our total revenue, a number that we are particularly pleased with, and which supports the strategy to diversify not away from voice, but also to put some more emphasis on the non-voice elements. EBITDA grew by 17% to 71 billion shillings, and net income, which is the number that Ali Khan is probably more excited about, and I can see him tweeting feverishly in the front row, net income grew by 38% to 32 billion shillings. Free cash flow grew by 21% to 28 billion shillings. And that means that the board will be recommending a dividend growth of 36% to 25.6 billion shillings. That equates to 64 cents per share.
Bob Collymore, Chief Executive Officer, Safaricom. Good to see you as always, Bob.
It's great when you call me that because I know you personally. When you call me Chief Executive, it sounds really important.
No, but you are. And I value the friendship as well. Bob, I asked you just before we started how long you'd been in the seat for, and I think you said nearly 48 months.
Yes, nearly 48 months. I came into country at the end of, actually the week of the promulgation of the Constitution.
Yes.
Which is the end of August, and then I took the reins from Michael the 1st of November. So yeah.
So we're nearly there. And I was looking back at the share price. I was recalling the time that was.
Good afternoon, ladies and gentlemen, and welcome to the half-year results for the year 2011-2012. When we presented these results this time last year, we had been operating in an environment where the calling charges were at 8 shillings a minute, fuel prices was at 90 shillings a litre, and the shilling was at 80 shillings to the dollar. Over the period under review, calling charges have fallen to as low, and in fact still remains, even on Safaricom, as low as 1 shilling a minute. Fuel prices have escalated to as high as 122 shillings a litre. And of course, we're all aware that the Kenya shilling has devalued considerably against all major currencies. So it is against this background that we're very proud to be presenting to you what we consider to be a very resilient set of results today. Now, we have successfully executed our strategy, guaranteeing continued growth in the company. And through our strategy, we have grown our customer base to 18.1 million customers. Revenues have increased by 5.3% to 49.6 billion shillings. Now, voice revenues declined by 5.5%, and the voice sector of our business has shown considerable resilience based on the fact that it is within this period that the tariffs dropped by over 80%, from 8 shillings a minute to 1 shilling a minute. Our M-Pesa and our data offerings are undeniably the market leaders in their respective sectors, with a total data revenue growth of 30%. M-Pesa had the highest growth at 49%, with broadband at 36% growth. And this is a clear demonstration that we remain Kenya's preferred network, and that our products and services are indeed making a constructive difference to the lives of our customers.
Bob Collymore, CEO of Safaricom, congratulations on your release of your full year results. If I can just quickly give the viewers an indication of what they were. Revenue was up 12.83%. Your costs were up 16.74%. We'll get to that in a second. Operating profit was actually up 3.93%. Profit before tax down 404%. Profit after tax down 404%. And your dividend, you increased 10%. Now, looking through those results, what struck me was this phenomenal second half rebound where you've delivered the highest earnings per share, I think, that has been delivered in Safaricom's history. It seemed a game of two halves. How would you characterize these results, Bob?
The first half was a tough half for the economy at large. I mean, It wasn't just Safaricom. I think you were the one who used the word, we were a bellwether when we announced our half year, and a number of other companies followed suit. So it was a tough year. But we then realized that we really needed to batten down the hatches and get the second half delivered. We'd done our calculations, we'd done our sums before we got to the end of the half year, clearly. Which is one reason why we did the tariff adjustment.
You raised the dividend 20%. I think I described it to Bloomberg as a very muscular move. I mean, I don't think anybody expected an increase in the dividend. Let me be frank about that. So I'm really pleased you'd managed to do that. What was the decision, the process behind that? You felt you had a lot of small shareholders who were reliant on the cash flow, and obviously you had a huge rebound in the second half. You threw off a lot more cash. What was your thinking around that?
Since we listed, our dividend is set at the 8 billion. This year we've delivered a higher EBITDA than we've ever delivered in the past. And, the share price is still somewhat depressed.
But massive demand this morning, I saw.
Is there?
No supply. 150,000
This.
shares on offer, about 10 million buyers.
Good Lord.
Yes.
I wish I was not tied up here. I was still somewhere. But seriously, I think that the share price is still sitting, looking a little bit depressed.
Where would you like the share price to be?
Look, I mean, it's difficult for the CEO to
yes.
say what the share
but
price
what do you
be.
Consider a fair value for given
Again,
what you...
I'm not going to get drawn.
Okay.
I can't get drawn on that one. Because my focus is really on just
delivering the numbers.
Deliver the numbers. If I manage the performance on the company,
yes.
I can't manage the performance on the share, because it depends on a lot of other stuff.
No, I know.
So instead of putting your money into equity, you could be putting your money into cash.
Yes.
Your shillings into cash, and you get a better return.
Yeah.
Not just Safaricom, but pretty much anything on the market today. But shareholders need to get some returns. And we felt confident enough that we have enough cash.
Yes.
To do what we need to do in the coming year. We have committed to a progressive policy. And by progressive, we mean we will pay out at least what we paid out last year.
Yeah.
So this should not be an indication that we're going to go with a 10% increase every year. It'll be nice if we could.
Yes.
But we are guaranteeing that all things being equal, that we will pay out next year at least 8.8 billion.
I just want to say once more, well done. I mean, I know you were asking me what my range was, and everyone sort of was surprised when I gave the range, but really you've done extremely well, and congratulations on the performance, and I'm very bullish, frankly, about the next 12 months. Thank you.
Go buy some shares, huh?
Yes, I will.
Okay, thanks, Ali Khan.
Thank you, Bob.
Thanks, man.
Thank
Cheers.
you. How does it feel to have delivered such extraordinary results? I was looking at the returns in the last 12 months. The share price has returned 100%. I think that's in the top of 1% of world returns that I can find. It's quite something.
Well, I think the team, including the board, I actually feel that the strategy is kind of coming together, and it's good when the plan falls into place, as they say.
Well done on that. Now, just looking at the headline numbers, we saw really strong profit before tax up 47%, profit after tax up 39%, free cash flow up 55%. I mean, these were really strong, muscular numbers. I mean, far from being, it seems to me you've moved on to the offensive game all of a sudden in the last, in this reporting period.
I think what we'd like to see, how we'd like people to view this, is in the context of what is possible in Africa.
Yes.
And, as I travel around the world, I see people increasingly start to look to the emerging markets, and increasingly start to look to Africa, and increasingly start to look at Kenya. And it shows that as a Kenyan company, it is possible to deliver very, very strong performance.
There are not many companies which are able to raise their full-year dividend 40.9% and then sort of say this is a sustainable increase. That really speaks to the underlying business, doesn't it?
We see, our shareholders stuck with us from the beginning of the price war, where if you look at the chart of the price, the share price, you see it went right away down, and they stuck with us. And so it is good to be able to reward them for that loyalty, not just in terms of growth in the share value, but also in dividend. And we're committing to an 85% payout, which we think is fair and reasonable. We measure our success actually not by these numbers. We don't measure our success by the profit we make. We measure our success by the difference we make. Of course, sometimes we mess up, but you look at the impact that our corporate social responsibility has had on the society at large. 800,000 people who have benefited from medical camps.
How much are you spending on that CSR program, because I'm sure people aren't aware?
In the past year, it was more than £500 million shillings.
Yeah.
And in this year, the commitments that we've already made will probably take it up to £1 billion shillings.
Bob, I've got to congratulate you and say, as I said, really strong results, and very proud of you, because I remember when where the journey started, and you've lifted the share price, you've delivered for shareholders, and I hope we'll see all-time highs later this year, which I think we will.
And I thank you for your confidence in us. You've always been very confident in this asset. And I know when you were talking about £6 shilling share,
I got bashed on everywhere.
And then you went up to 7 shillings and 7.20, and each of your forecasts has worked well.
Thank you.
So you stick with us when we were doing a 49% dip in profit, and it's good to see that.
Another set of outstanding results. I remember sitting here when we were in the middle of the price war, and now all I look at is, plus 39%, extraordinary numbers, very powerful. Can I just ask you first, how would you characterize them?
I think the numbers were pleasing. They were slightly ahead of the expectations that we had at the beginning of the year, and slightly ahead of the expectations that we have set with our shareholders. So, we've revised our guidance
that was, yes,
up to 20 to 21 billion, and originally we'd said 15 to 17.
But that's a big signal on the dividend as well, isn't it?
Yeah, it is, because free cash flow is what drives the dividend. Traditionally, we paid 85%, and we will never pay less than 85% because that's the policy we have. And so I think, yes, it is a signal that we're a good dividend company.
Now, I was looking at the returns this year, discounting the dividend which everyone's about to receive. The share price is up 91%.
Yes.
Last year you had a similar, you had an extraordinary return, and I went back to when you started, which was November 2010, as you said.
It was 3 years ago, almost exactly. It started on the 1st of November.
And the return has been in excess of about 44% on an annualized basis, which really must rank right up there. What are we talking about now for the share price? I mean, to me, it looks like we're going to 12 off the basis.
Well, we don't speculate on the share price. Management really just has to do what we think is the right thing to get the fundamentals right in the company. We think we've got it right. But, we also are conscious that we still have 5 more months to go before the end of the year. 21 kilometers doesn't make a marathon.
But there are not many people who've delivered these types of returns, and I think we'll be interested to see what happens tomorrow. What is the next step? How do you keep this going? I mean, if you look through the revenue numbers, all up, double-digit growth, some at messaging of plus 48.71, mobile data 43.1. Where are you looking next? What are you looking at?
I think that's a question which usually people prompt you to say, we're looking at Uganda, or we're looking at Sudan, or we're looking to get a banking license. We tend to see things in a very simple way. We're not that smart as a team of 3,896 people. We say, when we wake up in the morning, what are we going to do today? How can we transform lives? And tonight we're going to go to bed. The whole team will go to bed, and we'll say, by providing free internet connection to public schools. And that makes us feel good.
Yes.
And then tomorrow, it might be a road safety thing. And the day after that, it might be how do we help fewer mothers to die in childbirth and those things. And we just, it's like walking. We just take one step at a time. We've been around for a while, so
Yes.
it helps, and we do some good stuff, which I think customers recognize and reward. But we're sitting at about 86.
Earnings per share up big. I mean, 37 cents a share from 28, up 32.14%. Free cash flow, you gave strong guidance there as well. So in terms of the forecast for the full year, and these very juicy dividend increases that shareholders have gotten used to, of which a lot of them are our friends. What is the takeaway from this? I mean, this is surely a year-on-year dividend increase.
Well, the dividend decision comes at the end of the year.
Yeah.
So we give guidance on the free cash, and what we've done is we said we'll hold the guidance, we'll hold the number the same.
Yes.
But of course, what that means is that that is how much we'll have free after we've paid for this year's worth of the security project. In other words, if we didn't have the security project, the guidance would have been bigger. But we do have to pay for some of it this year.
And the security project, is there a commercial dynamic to it, or is it more a thing where you're supporting the government in what is clearly a situation where it needs a lot of support at the moment, given the recent events that we've seen?
It's more of the latter.
Yeah.
It's more of supporting government, and this afternoon we talked about the support we were putting into Capetto, because they don't, they can't communicate. They don't have any network there. But the benefit for us, because it's not entirely altruistic.
Yes.
The benefit for us is that we do get access to the 800 spectrum, so we can start to roll out LTE. But that's not free. We're paying $75 million for that. So,
Bob, well done.
thank you.
Thank you. Bob, now can I just go back to things like some of the number issues, if I may? Revenue last year, full year, was up 16.4% without putting any numbers. Are we on trajectory here for a similar outcome, do you think? Or is this are there more headwinds this year?
Well, there's certainly headwinds.
Yes.
And, if you spoke with the people in the hotel industry,
Yes.
you can see how the headwind is. I was in Mombasa 2 weekends ago, and the weekend before that I was in the Mara, and you can see occupancy levels sitting at 20%. So
economic activity levels.
economic activity levels has been a challenge. But having said that, we get some guidance at the full year, and we're sticking with those guidance. So we're pretty confident.
That was pretty confident guidance.
Yeah. So we're not expecting to see much in the way of variation there.
And then, people love your stock because of the dividend, including my father. And say he will kill me if I don't ask you. He says, is his dividend intact? And do you see that trend of, you've had a very high dividend payout ratio, you've spoilt some shareholders. Is that still intact? Or, you're talking about CapEx expenditure. Are we going to have to move some money into things like that?
No, we... the dividend we've kept a bit of money back, So we're paying out 85%.
Yes.
And I mean, you can see some of the things that we need to pay for. I mean, U-Mobile has come up. The capex on the police project, when that finally comes through, it'll be back into the year, or maybe even next year. So I don't see that that's going to have a dent in the dividend. The dividend is a progressive dividend policy.
Yes.
And we expect to pay more next year.
Yes.
I mean, it's not the time to be declaring dividend, but we expect to pay more next year than we did this year.
Excellent. Well, that's sufficient. Thank you very much, Bob.
You're very welcome.
Thank
You're
you.
welcome.
Bob Collymore, CEO of Safaricom. I feel as if it's a Groundhog Day. My God, brilliant results. Really fantastic. I think, I was sitting there yesterday thinking, where were the expectations? And I think wherever they were, you're way above them. Bob, the stock market absolutely loves Safaricom. I think it's up about 25% already this year. It's done all the heavy lifting for the Nairobi Stock Exchange, outperformed the all-share by a factor of 4 this year. We're probably going to see another spike higher today. Hiked the dividend if you buy, I think, over 30%. I mean, this is really, really strong numbers. I mean, how, the market has been right in the way it's lifted your share price over 3 years. It's been a massive bull market.
Yes, dividend, we're pleased with the dividend lift, which is 36%.
Yes.
We would just caution to expect that kind of hike every year. We did say we have a progressive dividend policy, so the dividend will always be higher. In fact, I was watching one of our old video recordings earlier this week, and we did say that the policy is that the dividend will always be larger, at least the same or larger in the coming year. But I just want to temper people. Don't expect a 36% hike every year. That's.
And you've got a couple of weeks back, you brought M-Pesa back from Germany. It was I could feel the stresses. It was a fantastic achievement. What's that going to do? I mean, besides making us proud that we've got it back in our own country, what's it going to do? Is it going to?
Well, the thing that customers noticed immediately. So we switched it on at 11:48. Which is about 7 minutes earlier than we said we would. Immediately I was noticing on Twitter, people were saying how fast it was.
Yes.
And it was 3 times faster than its predecessor. The second thing is it's much more secure, because now we have double redundancy. So you have one data center, and then you've got another one, and then you've got another one. And you can fail over those 3 very, very quickly. The level of security which is built around it is much greater than we had before. But for customers, and I mean, all these things are very important for customers, but the thing which is also very important for them is the functionality that they'll start to get. So we'll start to see in August of this year the new roadmap starting to roll out. And one of the big pain points for customers, for all of us actually, when you send money, did you send it to the right person? And that fix, people have been saying to me, it must be an easy fix. Really, it's been a very complex fix. On this new platform, it's going to be much easier to do things like that. For local developers, it's going to be easier to give them the API, because we couldn't give it to them on the old platform. And that's something which I think is going to make a lot of difference to local developers, local partners, local banks, for example.
Bob, if we go back to the numbers, I mean, these were really, really strong. I think revenue numbers were over 11%. It's
13%, both on total revenues and voice revenues.
Yes. And if you look at your brand equity, that also is an outlier within Kenya and actually within Africa. What has been the secret to that success? Why do people identify with your brand so strongly and so consistently over a long, notwithstanding, there have been service issues and sometimes those things flare up, but it seems to still consistently be a brand everyone identifies with, including myself.
I think the trust comes from relevance.
Yes.
If we are relevant to you, then you'll pay attention to us. And then if we can be transparent and honest, and of course we mess up. We've messed up at least a couple of times in the past couple of months. The post-pay story that we had. If a customer pays...
Amazing results. you've presided over the most extraordinary period of value creation for shareholders. I think, you were mentioning before foreign investors. This has probably been one of the best returns had they invested at the beginning of the year, 2 years ago, 3 years ago, at any time since you've come in. So I really fully congratulate you, because it really is a statement. And to be able to lift your dividend by that amount anywhere in the world today is you're in the top percentile. And I really wish to congratulate you for what you've done. And I think it was a no-brainer for the chairman to extend your term, if we can call it like that. So really well done.
Thank you very much.
Thank you.
Thanks,
Thank you.
Thanks,
Bob. I just wanted to touch on one thing, because it's been pretty turbulent out there. You made a very interesting comment in there. You said, look, the country's not dying. You feel the media has gone overboard in this matter. Can you tell us, sitting there at the apex of the biggest company, the stock exchange, what's happening? Where are we going?
Yeah, look, I'm getting heartily fed up with the media, because I think that the media have taken this "if it bleeds, it leads" thing too far. If you look at the headlines in the newspapers, I haven't looked at it today because, frankly, I've stopped reading it.
Yes.
You would believe we're in a different country. I think, it is all about the negative story. And I think Kenya's doing pretty well. As my chairman said a moment ago, 5.5% GDP growth is actually pretty good.
It is.
Yes, we've seen some high interest rates. Yes, we've seen the shilling suffering a little bit, but we're seeing a recovery in all those things. And, we need to dwell on those rather than on the negative story. So I would say, yes, you refer to us as one of the larger companies.
Yes.
But I would say my outlook is certainly not as bleak as the Kenyan media would have
It's
you believe.
painting it.
Yeah.
Okay. Bob, can I go to these results? Because, they're really outstanding.
If you must.
Yeah. Wow. I was sitting next to Dennis, and each time you sort of read out a number, we were going, wow, that's... So first of all, total revenue, Bob, over 90 billion, I think, when you look at 97.22 billion, up 22.54%.
But all of this is pretty much in line with guidance.
Yes.
We've always
Which you
said,
upgraded.
we've upgraded a little bit. But these results, these half-year results, we've always said low double digits growth.
Yes.
Was what we expected to achieve, and that's what we've achieved. I think one of the surprising numbers is probably the customer acquisition,
Yes.
adding another 3.25 million customers. We'd always said that when people say, has voice died?
Yes, we were always saying that, and you've actually
you've always said it.
Well, no,
you
because
guys
everyone
always
would
said
say to me, Alicon voice is dead, all these things have come now.
Yeah, and we have always said that, there are more people coming into the market. We've got
Yes.
a growing market, The
Yes.
population is growing. If the population is growing, then of course the customer base will grow. 3.25 million is a pretty good share of those people who are coming into the marketplace.
And also, what was interesting to me was if you look at your voice revenue, it actually grew twice as fast as it. Now, Bob, if we look through, what else would you characterize as something impressive from those results? I mean, I found it all impressive across the board. Where else have you seen growth?
I come back to my thing that the numbers are interesting for shareholders.
No, but they confirm a strong story, right?
But we have a more interesting story around what we call the true value analysis.
This was the KPMG analysis you were talking about. Yes.
There's always a sense that Safaricom has done more than just these numbers betray. And so when we asked KPMG to do the analysis, and they've done this in a number of other places,
Yes.
it has become clear that the profit number from last year, which was about just under 32 billion shillings,
Yes.
Our real value that we added to the economy
Yes.
was almost 10 times
Yep.
as much. It was 315 billion shillings in terms of the number of jobs created, in terms of the impact of M-Pesa on customers' lives.
No, huge.
And what it showed is that for every shilling that a customer spent on transaction fees,
Yes.
they gained 4 times. They gained 4 shillings in benefit, and KPMG have a methodology for working that out, which we'll talk about.
Yes.
The Delight Index, we don't measure the Delight Index, we now measure Net Promoter Score.
Yes.
A Net Promoter Score, we've reported a number of 6 to 3 here, which is a 5-point lead
against our nearest competitor. But if you look at things like brand equity, I wouldn't have believed that we would have been able to improve our brand equity above 84%.
And what was the last read you mentioned?
9 to 1.
Yes.
Now,
That's huge.
The nearest brand, which comes, is
what
I think
percentage?
is at 4 to 6. So it's a huge improvement. But also, if you look at reputation and trust is a really important measure for us. And of course, we do betray customers' trust from time to time. I put my hands up, and we don't intend to do it.
Yes.
But our trust score is at 92.
That's huge.
Now, 92, you wouldn't find. Actually, I don't think you'll find anyone else in the world. Not just in Africa, with a 92. And I mentioned just now the Fortune 500 list of companies that change the world.
Yes.
As a little company, we smile inwardly because we're actually kind of pleased because that's how we measure. And we came, just with the record,
first.
We came first. Ahead of Google, ahead of Facebook.
That's an extraordinary.
The other one who's in that list, incidentally, which we should also be, and I should give them a shout out, is M-Copa.
Yes, yes.
Because we've been working with M-Copa for many years now, and they're also in that list. But we're kind of pleased that at least it's been recognized that
I think it's
we are making a bit of an impact
worldwide. We've got Bill Gates tweeting you guys and all kinds of things. Can I just quickly?
Bill Gates. We have worked. Michael before me, and now I. I think Bill has always been impressed with the impact that M-Pesa has made. And unlike a lot of people, people just want to be billionaires. When you speak to Bill, he's about how do you make an impact. And the reason why he likes us is because we are making an impact. It's not because these numbers compared to Bill, I mean, it's nothing.
No, but it's pretty important here. And now, looking forward, by upgrading guidance, you're obviously pretty bullish about the full year performance.
We're as bullish as the upgrade has suggested. And
Bob, to leave us with some interesting detail about what are you seeing? You've got this cockpit view and on the Kenyan economy. What are our people doing? What are you observing? What can you tell us to finish off? Because really, these results speak for themselves. I don't. And it's a pleasure interviewing you because each time I come in here, I always wonder what they're going to look like, and they always look great. So that's the first point.
Cockpit view is an interesting phrase.
You got your dashboard and...
Well, yes, we measure lots of stuff. And, our new regional structure means we're measuring the minutiae as well. So we're getting all the way down to the cell site to say, this cell site, how is it performing relative to how was it performing last week and last month. And we're also getting the feel of the customer. So the business is no longer being run from head office, it's being run from the region. And we're beginning to see, what we are seeing is, of course, the high interest rates are beginning to affect some small, medium-sized enterprises.
Because it's been a pretty huge shift, really, for those guys.
It's been a shift, but we've started to see a recovery.
Yeah.
I'm
like yourself, I'm bullish. I think, T-bill rates are coming down, and I think the shilling goes back below 100.
I think so. I think so. I can look at you and say, you're bold. Or I can look at you and say...
but so are you.
I can look at you and say you're fashionably...
how kind.
No, it's not being kind at all. It's telling the truth.
Bob, fantastic results. Congratulations.
Thank you.
And I think they speak for themselves.
Thanks, Anika.
Thank you.
Thanks.